This is the Domain Magnate Show, where you'll learn everything you need to know about buying, optimizing, and selling online businesses with your host, Micheal Bereslavsky.
Hello everyone, welcome to this episode of the Domain Magnate Show. Today we have with us Mohit Tater from Blackbook Investments. Hi Mohit, welcome.
Hey Michael, thanks for having me. Finally good to be talking after a long time.
Yeah, so we've been chatting for quite some time. I think we've known each other for a few years now, and we've exchanged a bunch of messages. We've had a mastermind together for some period, so it's quite nice. So it's great to be able to reconnect and talk more. I know quite a few things happened with your business in the past year or so as well. So looking forward to catch up. So for an intro kind of to get started, can you just tell us a little bit more about what you do in general for our listeners?
Sure. So basically, I run and manage portfolios of content sites, in short, and that's through my company, Blackbook Investments. And the backstory, I'll just give you a quick, overview of the backstory, how that it came about. So I graduated from college in 2011, and then right after I joined a startup. I took up a job with them as a content manager, and it was an up and coming startup, and it's actually a unicorn right now. And people tell me, had I stayed there, I would probably, have made shit ton of money, but that's all right. I'm happy I have the freedom. So I, decided pre-decided that I'm just going to do the job for 1 year and then I'm going to quit. So which is what I did. And during that 1 year when I was working the job, in the evenings, I was, learning how to build websites, how to blog, WordPress, all of that stuff. And why I chose to do that, that was because I read a bunch of books, 4-Hour Work Week, Rich Dad, Poor Dad. And I was wanting to, do something that would give me the freedom of time, freedom of location, like we all do. And I was like, there's nothing better than the internet to help me achieve that, basically. And that's when I turned to the internet to help me, achieve that dream business / lifestyle. And then, I was like, let's start building websites. I mean, that's the first step towards building an online business. So I started doing that, started building sites from scratch, started blogging, but I could never make any money from all of that. I was at it for over a year and a half. Even after I quit my job, I was still at it for about 6 more months. And before I decided that, it's not working, I have to do something differently, which is when I chanced upon Flippa. And I saw that, people are buying and selling sites that are already making money. And the multiples were quite low back then. Like I could buy sites for 10, 12x monthly. So I had some savings. So what I decided was, I took the plunge. I bought a website for about $2,500. That was my first acquisition. It was a social media marketing service, basically, to increase your followers and likes and all that stuff. It was quite the rage back then. Almost like 10 years ago, so I bought that for $2,500. I ran that for 6 months. I could grow that. I actually used my whatever marketing skills I had. I grew that site, grew the business, made like 3 times the money while running it in the 6 months that I had it for. And then after 6 months, I sold it for like 12K or something. So I made a nice chunk of change during those 6 months. And that was more money than I could probably, make in my job, like even if I worked for 2-3 years. And that was a game changer. That made me believe that this thing works. This is not like a scam or something. Make money online is legit if you know what you're doing. And then, after that, I bought my next site. That was like for $4,000 or $5,000. Did the same with that. And slowly I started building up confidence. And I started buying multiple sites, creating a portfolio, small sites, not anything big or fancy. And in 2013, I was when I had sold the first site, I always had wanted to go to the US. So I, took the proceeds and went on a 3-4 month long trip, vacation, whatever, to the US. I had a lot of friends there. I met almost all of them. I was staying with a friend of mine in downtown, in Midtown Manhattan, and he happened to be working on Wall Street. He was an investment banker, and he curiously asked me, "What are you doing? What do you do?" And I told him this is what I do, and he was like, "You know what? Let's do it together. I want to buy a site too." I was like, "Sure, we can do that." So that's how the idea for Blackbook was born. So we bought a website for my friend, which I started managing, and he started getting passive income from my management. And then once he saw within a year that he had the money coming in, had good returns coming in, he bought another site. Of course, I helped him do that, and then he got his friends and family also involved.
And how long ago was that?
That was in 2013 and 2014. Yeah.
Oh, nice.
So that was like 6-7 years ago. He got his friends involved. He got his family involved. We had a bigger pool of money to work with. I started buying low 5 figures, mid 5 figures, slowly stepping up. And I was able to, give them good returns because the multiples were low back then, So they were like really happy getting 30-40% ROI on their money after my fee. And then officially I launched Blackbook in 2014 because I had more and more people coming up to me and asking me what I was doing and if I could help them do it. So that was the backstory. Yeah.
Yeah, that's very nice. It's very similar to how I got started as well. I was doing different things at the same time, building some sites, trying some domains, other things, and also started buying some small sites. Yeah, it made some profit, and I just continued. So it's very interesting, and it involved Flipper as well. So just to jump quickly to now. So in this past 10 years or so, if you had to guess, how many websites have you bought or sold? What would be some of your biggest deals?
So past 8 years, I would say I've bought I've done over like 150 deals, I think 150 deals, ranging from as low as $2,000 to I think as high as our biggest deal was somewhere close to 450K, 500K. That is the price range we play in. And anything and everything in between. Right now, our sweet spot is 100K to 400K. Basically, that's content sites in that price range. That's where we play at, and especially because the multiples have gone up, so you can't buy much for 150K or 100K these days.
Yeah, it's very similar for us as well now. It's kind of similar range, and so the biggest. So you said from 2000 to like 450 was the biggest. Like about 100 deals. Pretty good.
Yeah, you could say that. We do have sites in our portfolio that we haven't sold yet that might be more valuable than 450. Could be over 600-700, but we haven't sold them, so we don't know yet. But yeah, based on today's multiples, yeah.
How many sites are you managing currently in your portfolio?
I think I'm managing 3 client portfolios, and 1 of my own portfolios. So between all of these, I think there are about 18 to 20 sites at the moment that we're managing.
Yeah, that makes sense. Nice. And do you have, are they managed by your own team, or do you also outsource some things?
Yeah, so I prefer hiring full-time in-house, and it's a tough job to find good people, smart people to work with you full-time. But I'm lucky enough to have found smart people who are like site managers. That's what we call them. And they run and operate a site like they own it, basically. They're responsible and they're answerable for whatever happens to the site. They have junior SEOs working with them to help assist them with whatever they need to do on the site. And then we have, of course, the tech person. We have like writers. We have multiple writers in-house, and we also outsource to writers who are subject specific, niche experts, basically. And yeah, what else? We have an editor. So yeah, basically all the people that would be needed to, just run a well-oiled machine, a content machine. We have them on payroll. And link building has been a tough, to hire for. link building rules. Like usually people who build links, they know their value. So sooner or later, they just graduate to charging per link rather than being on a payroll. So that's like a churn basically. Always on the lookout for good link builders.
Yeah, and where are you based currently?
So I'm in my hometown, city called Jodhpur in India. It's in the western part of India, a state called Rajasthan. And my city is also called the Blue City or the Sun City.
Nice. So is that an advantage being based in India, that you're able to hire people for lower salaries locally, but then like compared to people who are in US and have to do remotely only?
Yeah, so we haven't hired in the US per se, at least not full time. And salaries in India definitely are not as high as they are in the US or even Europe, I would say, but they are definitely at par or even above Philippines or at par with Eastern Europe, by the way. So at least for the smart people that you want to hire, I mean, sure, you can get someone for $300 a month, but you might not know how smart they are, So good people do cost more money, but yeah, that has been an advantage. And more than I think that's half the story. I think the communication, the time zone is the other half. That's why I prefer hiring from here also. So that way, yeah. And I can get the team together, at times, and they can have fun. They can bond with each other. So I like to deploy a hybrid model wherein we have a co-working in New Delhi, and we also work remotely. So we have a hybrid model basically.
Yeah, that's nice. I was always wondering how much of a difference it makes if you're able to hire locally and have people like actually meet each other, because our team are all remote. We actually have some people in India as well and in the Philippines, and most of them haven't really met each other. We haven't really done any meetups yet. We plan to at some point, but then everyone is in a different time zone. It can be challenging, and I think if you are able to get people together, it probably helps with team building a lot. So that's a big difference probably.
Yeah, it is. I sometimes do struggle to hire good people because if I'm limiting myself to India, but I think I'm actually always hiring. I'm always hiring. So we have a funnel. People are coming in all the time. So, we always have a good set of people to choose from, basically.
Yeah, I think that's how it should be, absolutely. Because, you never know. The best people are usually the ones that already have a job, or the ones that don't apply.
They're not looking, maybe. Yeah. They're not even looking, maybe,
Yeah. So tell me about your best deal. If you had to pick one, the one that was most profitable, most exciting, whatever, your best deal.
Yeah, I think this deal was
most memorable.
Yeah, content site we bought. It was one of the very first sites we bought in 2014, one of the very first ones. And it was an investor-owned site. We bought it when it was making about $400 a month. $300, $400 a month. And around 2014, 2015. So we kept it all this while. It changed hands, I think, once or twice in these last 5 years. But we were able to grow that from $400 a month to almost like it's touching 10K a month right now. So I would say in terms of the growth, the multiple, the X, how we were able to 25X that deal. Even though it took us a long time, but it was slow. It was not slow, but it was fast and steady growth, basically, I would say. 25X in 5 or 6 years is not bad, I would say.
Yes, that's pretty impressive growth. And you mentioned it changed hands. What do you mean?
So basically, when one investor wants to exit out of a deal, I am usually able to sell that site within my investor network. We don't have to go to the market because we have more investors wanting to buy sites with us. So I rather sell them a site from an existing investor, a site that I know, and that I trust, rather than buying a new site for them, basically. So I can confidently tell them that, this is a good site, we should buy this.
Yeah, that makes sense. And how do you price it then, or how do you define the? Yeah.
So I don't price it. The market, like the seller and the buyer, they do at least know the market valuations, like the multiples. Otherwise, I educate them on the market multiples, and then it's just a matter of negotiation how much the seller and buyer want to, whatever price point they want to agree on. Like I do mediate, but I cannot represent both parties, so I just let them be, and I advise both of them and what would be a good price for this, and if it's good for you to take it or not. So yeah,
makes sense.
it's up to them. Yeah, like I don't have any role there.
And can you tell how do you structure the compensation or the fees for your management, for investors, for managing sites?
It's fairly simple. I think it's pretty simple to what you guys are doing. So we charge a 10% finder's fee, which is a 10% of the deal size that we buy. And for that amount, we do everything, do all the groundwork to find the deal based on your preferences. If you have any niche preference or whatever price range, we do all the due diligence. We talk to the seller. We get on calls with them. We we check all the revenue proof, all of that basically. Do audit if needed, and then once everything checks out, we do the negotiations actually on the behalf of the buyer, who we are representing basically. And my aim is to save them more money than I'm charging them. So if I'm on a, let's say, on a $100,000 deal, if I can save them like $15K and get that for $85,000 and charge them $8,500 on top of that, that is $93,500. They still save $6,500 basically. So that's the idea behind that. And so that's the one-time fee. And then once we start the management of that site, it's equal split basically in the income of the site. Yeah.
Okay, so that's let's say you bought a site for $100,000 and it makes $3,000 per month. So what do you pay the investor? What do you charge? It's
half. We just split it equally. They get $1,500. I get $1,500. Blackbook it.
Okay, makes sense. And for the expenses of growth expenses, do they come out of your part then, or is it separate?
They come out of my Blackbook share, basically.
Okay.
If the investor wants to put in more money, they want to go more aggressive, they are free to do so, but then they would have to, fund the extra additional growth, basically.
Okay. Yeah, that's similar to our structure as well. And where do you mostly find deals these days? I think that's the biggest challenge for.
It is
for most people.
That's the biggest. Yeah. I don't have there's no shortage of investors, but there's definitely a shortage of good deals, to be honest. What I'm seeing these days is that sites are being created and sold by professional marketers, basically. More and more professionals are doing it, and they're doing it with the sole purpose of selling them at some point, which is different than what I would like to buy. I would like to buy a site that has been created by, let's say, an individual who is enthusiastic, who is passionate about a certain topic, and they started as a hobby, and it grew out of proportion, and it grew more than they expected it, and now they can't handle it. So I like more kind of those deals, but those are tough to come by these days. So I do have all the regular channels, like you have all the brokers, marketplaces, Flipper, Empire Flippers, FE International, Quiet Light. So we have subscribes to all these all the listings, and but more and more I'm inclining towards and what we're also doing is getting our own private deal flow, inbound and outbound both, basically. Inbound in the sense that people now know that we buy sites because we've been doing it for almost quite some time now, and people know that we close quick. So that's one thing. People come to us because they don't want to go to the brokers and pay a fee, or spend that time doing all the due diligence. If they know that I can close within a few days, they're happy to do that, and maybe take a lesser amount because they'll get a fast close. And outbound in the sense that, if an investor has a preference that they want to get into this niche, then we'll shortlist a few hundred sites in that niche that fit our criteria, our metrics, and then we'll do an outreach campaign asking the site owners if they're interested in selling their site. So, yeah.
Yeah, that's very similar to my view as well. That there are so many sites now that people just build. They build them and they rank them quickly, using expired domains and using a lot of very aggressive SEO, building up quickly backlinks and PBNs. And these sites go up quickly. And every time I see a graph like that, I know it's going to come down soon. And just everywhere there are so many sites like that. Most of Empire Flippers listings for content sites and on the other brokers as well. So it's definitely getting much more difficult to find this type of solid businesses with our passion projects. And we also put a lot of effort looking for them. Yeah, like the recently one of the recent deals we bought a website that's been around for about 7 years, and it's a kind of a small niche in education. And you know when you look at the website, you immediately see the difference. That you can very easily now distinguish between something that's a passion project and something that's just like built to sell. Yeah, exactly. So that's always exciting finding those, and then you see that stability in traffic and revenue over a few years, and all the natural links, like thousands of natural links. But it's getting more and more difficult to find.
It is.
So yeah.
What I've seen, Michael, is that 80% of the listings are either their income trajectory is going like crazy, up, and they want to sell. They want to cash out because they know it's going to come down.
Yeah.
So I beware of those. And within that 80%, the other half is sites that are going, and the people know that it's not going to recover. It's not going to come back up. So let's get out of it while we can before we can't get anything for it. So even those sites I don't like much because I don't want to spend so much time, just recovering without even knowing that if it's going to recover or not, while paying close to market price. I don't want to do that. So there's very few sites that you'd see that have a steady, slow growth because most of those sites people don't want to sell, basically.
Yeah, and exactly. Recovering can be really difficult. I mean, unless you know that it's something very specific, then you just kind of try a bit of everything, but that can be tough. And I think there are probably still some sites you can occasionally find, even among brokers and marketplaces with their solid businesses, and then you have to act quickly.
You have to do a bidding war. Sometimes you get into a bidding war then.
Yeah, I think that's what drives the multiples out these days. That's an interesting state of the market. But the other interesting part of it also is that there are so many buyers that many of them really just are not that experienced, to put it mildly, and so they see the trajectory and they just think that's amazing, it's gonna keep growing, and they buy it, and usually it doesn't.
They get their hands burned, and then they're like, they lose faith in the asset class, and then they are very skeptical when they come to you. So it's like a re-education, basically.
Yeah, and we've had that. I remember we had one investor that the first question he asked me on the call was he invested with the income store before. So he asked me, how do I know you're not running a Ponzi scheme? And that happens too sometimes. So yeah.
There you go. In fact, interestingly, I'll just since you brought up income store, I'm always aware of people who guarantee returns. If you're guaranteeing me 1% or 2%, I'm going to take it. I'm all right. I'm not going to take it, but I'm going to believe you that, okay, you'll definitely give me 2%. But if you're guaranteeing me anything above 12%, I'm going to be skeptical, guaranteed income. So I advised a couple of my friends to, not, invest with the income store, because I said, it's a major red flag that they're guaranteeing me 15% ROI. But I guess the company was just too big, to be thought of as something, scandalous. and they went ahead when they had the choice of going with me. They still thought, maybe it's a bigger company, maybe they'll do better. And they went, and then they had a bad experience. They ended up losing all 100K that they invested. And then I educated them, that this is how things work. And I'm still ready to help you, but the site that they bought for you it was not the site that was making the money. So yeah, I mean it's gray area, but there's a lot of education that is needed in this space for new investors. Otherwise, they'll end up burning money. Yeah,
I think the big challenge also is they try to manage too many websites. They had hundreds of websites. That's really difficult to do.
It is. I struggle with 20 sites. Just think of managing hundreds of sites. It's like managing hundreds of businesses, literally.
Yeah, and one Google update could wipe out everything too, so especially smaller websites.
Exactly, because they all ultimately are dependent on Google, mostly the content site.
Yeah.
It's not like physical businesses wherein if you have a restaurant, then you have a barber shop, and then you have a whatever laundromat, that they're not correlated. But one Google update can wipe maybe a majority of your sites, and you'd not even know. So yeah, it's risky.
Did you have that happen, by the way? How did the last update go for you, December 4th?
It was a mixed bag. A couple sites took a big hit. Most of them were steady, actually, just like, maybe 5% up or 5% down. And actually 2 or 3 of them actually took really off in December. So I think this one was really different than what we have seen before. So we'll probably wait until the next update happens, so I'm not panicking yet. But again, it's just a part of the business. And I try and educate my investors as much as I can. And I always say that, only invest the money that you're ready to lose, you're willing to lose. If you come with that mindset, then you'll do well. Otherwise, you'll always be tensed.
Yeah, that certainly happens. Updates are frequent now. But for us, I think the biggest lesson was just to be even more strict with criteria and to try to avoid all these sites with aggressive SEO, with overly commercial content, and all these similar things, expired domains.
When you do that, you're hardly left with any site to buy.
Yeah, that's a challenge indeed. And then you start looking at other verticals as well.
Yeah, exactly. You got to do something because you have money. Sometimes, I've had to turn down investors when I was not able to find websites for them in 2-3 months because I did not find anything that was good enough to buy, and I did not want to buy anything for them. That would just, I know that they'll get hit in the next update. I could have made my commission, but I think goodwill is more important than just temporary profit, I'd say.
Yeah, we had that quite often as well. I had to turn down many investors, and then we had investors that just like kept emailing, every week or so, like, okay, I have cash. Can you have a website for me to buy? And what's even worse, in that sense, is that sometimes we do find a deal and then we show it to them, but before we buy it in our final due diligence, we find some issues and then we recommend them not to proceed. So then we don't actually buy them, and that can be a little frustrating for an investor. But I think in the end it's best to just know that if you're buying good deals.
As I'd say, don't buy. Just keep your cash. Don't buy bad deals. That's what I would say.
And so what have you considered looking into other avenues like buying SaaS businesses, FBA, anything else?
Yes, so we are looking to branch out later this year, early next year, into my personal preference is to go for SaaS. So because I tend to, I don't like dealing with physical products, goods, inventory management, all of that. So I'd rather go with SaaS, which is more scalable and less dependent on Google. So that's the logical next step for me. So this year I'm going to be trying and putting a team in place to be able to handle SaaS businesses. And ideally, we'd like to go and start offering SaaS businesses to our investors starting next year, basically. So yeah, definitely looking into that.
Yeah, SaaS. I think SaaS can be really good. The challenge is if you buy something that's really complicated, then you might get stuck with dealing with all the development.
I know. That is, it's pros and cons. As for e-commerce, I think I might not want to do it myself. So what I do have in mind is I was talking to a friend of mine who also does content sites, and he also does e-com. So maybe we could combine forces wherein I could take care of the content part of the things, and we can maybe launch a brand like a D2C brand under that content brand basically, and expand into e-commerce. So if two people who have different expertise, one in e-com, one in content, can make a brand out of just a content site. So that also is an avenue I'm exploring.
Yeah, that makes sense. So what are your current plans? So what are you currently working on?
Yeah, so as you probably would know that the Empire Flippers came out with their investor operator program called EF Capital, Empire Flippers Capital, recently, and Blackbook was selected among the first cohort of 6 operators. So we are one among the 4 operators who would be buying content sites. So that's what's happening right now. We're hiring for that basically at the moment while the raise is happening, so that we're ready from day one when we have the funds in, and then we can go all in and buy the sites that we want to, and not have to wait for buying first and then hiring, because the initial month or two, they're most crucial basically after the acquisition. So that's going on. We're hiring, looking at deals. That's what I do mostly these days, just looking at deals. Day to day, I'm not as involved in the day-to-day management of the sites as much as I am overseeing the purchase and sale of the assets and managing the team. Other than that, we're also doing a small group buy of $1 million for Blackbook's private clients, because a lot of investors, don't have the 100K that is needed to work with us, which is the minimum that we do for one-on-one deals. So we had to come up with the group buy, which would be a minimum of 25K, and which would allow more people to participate in investing in websites. So we're doing it in 2 parts, 500K and 500K. So that 500K is almost done now. So we'll be starting to acquire sites for that as well. So these 2 things are
nice. And how is it structured? Is it can you tell us a little bit more about the group buy?
Yes, the group buy, we've kept it straightforward. The revenue is going to be split into 3 equal parts. One part will go as dividends to the investors. One part would go to Blackbook as the management fee, and one part would go back into the growth of the sites in the form of content, in the form of links, link building campaigns, whatever is at cost basically. So and the upside would be shared equally, 50-50 between the investors and Blackbook when we have that. So it's fairly simple. So basically we're doing it based on the revenue. So investors exactly know how much they will be getting. We're not doing on a profit basis basically. Then we'd have to explain, this is what an expense was necessary. This expense was also necessary, So when it's on the revenue basis, we just, $100 come in, they get 33.33, clean and simple.
And then what happens if you don't use the 1/3 that for growth? If you don't have enough, like if you have to have more money for growth, or if you have too much, what do you do with it?
Yeah, so we'd probably return it back to investors at the end, or we'll use it for let's say if everyone agrees, and if you want to buy more assets using that capital, that's an option if everyone agrees to that. Otherwise, we'll once we've done growing the sites, putting the money that is needed, we'll not overspend. We'll just probably return it back at the end of the group buy, when the group buy is over, basically when we liquidate the sites.
Yeah, absolutely. And And is it only for one website, or will you buy several websites?
Yeah, so 500K is not that big an amount these days, to be honest. So we're shooting for 2 to 3 sites. And then see how that goes, basically.
And how is it structured in terms of operation, accounting? Is it an LLC?
It's just 2 Delaware LLCs, basically. One would be the holding company, in which all the participating members, investors will be members. The other one will be the management LLC, which would basically take the management fee on Blackbook's behalf, basically. And investors would be putting in the money in the holding LLC. So fairly straightforward. I think most of the people in this domain are using the similar structures.
Yeah, sounds good. And do you also put some capital into the group buys and into the other deals with investors?
Yes, we're putting about 10% of my own money, same as I did with Empire. Not 10%, but close to 7% with Empire. Always good to have skin in the game, so that investors are also, have peace of mind that,
Yeah, sounds good. Yeah, so that's pretty similar. So it's interesting to chat because we are both doing some very similar things. And we probably deal with more or less the same group of investors and buyers and sellers.
Definitely, yeah.
And similar challenges, yeah.
Yeah, I think there's very few people like us who are doing this for others, like managing sites. There are tons of people who are buying and running sites for themselves. But doing it for others, I think there are fairly a limited number of people who are acting as operators and actually working with investors right now.
Yeah, so absolutely. Yeah,
it's good to be chatting. Yeah,
Yeah, we have Dom, and it's nice to be able to chat frequently as well. He's doing similar things, and
Andre's doing good.
As well.
He's done really. Yeah, he's killed it. He's crushed it in 2020. So really, inspired by him.
Yeah, so it's a cool industry. It's growing quite rapidly. Where do you think it will end up in a few years? What's next?
I think the multiples are going to go up for a few more years. I'd say that until a point would come where the risk would be just too much for the returns. I'd say, and then they'll probably come back down a bit and stabilize. Because right now I can see deals on Empire or even other brokers listing at 4x yearly, 48, 50x monthly, which is kind of crazy because you're looking at 20-25% now if you're able to maintain that. But the risk is high because if something goes off, you're down to 10% now or maybe 5%. Or with the last Google update, entire sites were wiped out, huge sites, from doing 10K a month to maybe $200, $500 a month. So there has to be a balance. The risk has to be worth the reward, or the reward has to be worth the risk. So I think it's going to go, the multiples are going to go up for a bit and then maybe come down a bit and then stabilize. And then I think within 5 years, the industry is going to be more mature than it is right now. And more people, I think there'll be more operators like us and even more individuals, buying and selling sites. It would probably become more of a asset class, maybe not as common as stocks or bonds, but still fairly common comparatively today.
I think I agree with that. Although I think that the multiples would kind of drift off a little bit. So now what happens is you don't have a lot of difference between businesses that are really solid and well established and low risk versus the businesses that are very new and very aggressive growth. So I think that's probably gonna see more of that as the market becomes more mature. The buyers, investors learn more about it. And it's really strange to see. Often we see businesses for 3 or 4x the annual profit that have many years of stable history, and in the same multiple you might see sites that are just a year old.
It's year and a half, exactly. And even them being old, even other than that, the pricing multiple that's used is also varies. Sometimes it's just 6-month multiple that's being used, L6 and last 9 months. So basically, of course, sellers want to maximize their sale value. So if there's any growth, they want to, just take the last months of the highest growth and, priced it based on that. Whereas, of course, buyers want to see a 12-month period, and average that out. So it's always a tussle.
Yeah, absolutely. And where do you see your business going next? What's your next kind of benchmark in terms of deals or revenue or team?
Yeah, so I think what we have set our goals. So our team specializes in content, which is what I like to continue doing, and create basically a media company, and that could be owned by investors and my own funds or my own money, and could be a company that something like Dotdash or Internet Brands, if you've heard of those, and own a portfolio of solid authority sites, established sites, having viewership, readership in the millions, basically across the properties, basically, and specialize in 3 to 4 verticals. So that's on the media part of things. As for Blackbook, I can see ourselves branching out into SaaS, at least, if not e-com, in the next year, and also developing in-house expertise to even build SaaS tools, maybe to complement the content sites that we have, and also be able to manage bigger SaaS businesses, because there is money in SaaS, in the sense that investors are more willing to put in money in SaaS businesses. And you can find SaaS businesses at all price points, whereas for content sites, you don't find them after a certain price point. So if you want a SaaS business for 10 million, you can buy one today. If you want for 20 million, if you want for 2 million, there's always a SaaS available for any price point that you want to buy for. And institutional investors, private equity, those people are also interested more in SaaS than just content sites. So I want to basically go that route and build a portfolio of SaaS businesses and package them up and sell to private equity, basically. Ultimately, that's what I'd like to do at Higher Multiple.
Yeah, I think that's what FE International do with some of their funds, right? They have the SaaS funds.
LTV fund, exactly. Yeah. So you just need to have the expertise before I can get into that. So.
And what ranges are you targeting? Do you plan to go for like more businesses similar range, like 6 figures, low, mid, or look for bigger businesses above $1 million?
High 6 figures, low 7 figures. That's what I'll be targeting next. Because Michael, the thing is, it's easier to manage $1 million business than 10 $100,000 businesses, as you would know, probably better than me. And I rather spend my money, my energy, all the funds, resources on 1 or 2 businesses rather than 20 businesses, because then maybe none of them would have a chance to grow actually exponentially. Whereas if it's 1 or 2 businesses, they probably have a good chance at growing much faster. Yeah,
I think that's kind of the unspoken secret in the industry, that the management costs, they don't scale linearly. Like as you get bigger sites, it doesn't become much more expensive to manage. Yeah.
Exactly. So you might as well manage bigger sites. Why manage a small site? Because the ROI is not that high for us as operators in that case.
Yeah, and how do you structure the management? Are you involved personally in operations of sites, or do you just have your team, like each person assigned to a specific site?
Yeah, so like I said, there's site managers for each site. Usually one site manager manages 2 to 3 sites. They have 2 people assisting them, 2 junior SEOs assisting them. I come in when a strategic decision needs to be made regarding if there's any investment to be made into the site, or if any campaigns need to be run, or if a site needs to be decided if it needs to be sold, or something needs to be bought. That's where most of my time goes, talking to investors. But whenever we do acquire a site, I am definitely involved in the strategy that we do for the site. So we make a plan for the next 3 to 6. We make a 6-month plan basically, and I'm involved in that. And then once the plan is done, my team takes it off from there and executes it. If something goes wrong, then they come to me.
Yeah. And how do you find people like that, the managers? Are they people who have experience managing sites of their own, or do they go for training with your company?
Yes. So interestingly, so these managers are skilled people. They have run websites. They have their own affiliate sites. I actually encourage them to do their own thing also. And I also even tell them, if you have a good idea, just come to me. We can do it together. I'm always up for that. And that's why maybe, they're happy working with us. So ideally, you can't hire site managers. You can't hire people who have, run affiliate sites or, bought and sold affiliate sites. I've tried that. The normal job description, posting on job boards doesn't help. So what I do is, what I have had success with is basically hiring on Facebook groups, basically, of these like Authority Hacker Pro Facebook group or Affiliate Lab Facebook group, because those people in there actually have spent money, invested money into those courses, and they are trying to do something, or maybe they have actually done something, and maybe they're at a stage where they're not able to scale. They're just stuck at one point, and they need more resources, more guidance, more training to scale that hurdle. And that's when I chat with them and see if there's a synergy for them to work with us. And most of our site managers are actually affiliate marketers themselves. They have run sites, they have grown sites, and they know the ins and outs, basically. So they know what it takes to run a site and grow a site, basically. So yeah. And then LinkedIn has been somewhat helpful also at times.
That's good. And do you incentivize them with some for good performance as well?
Yes. So whatever whenever we buy a site, whatever it's making that time is the benchmark that they have to scale. Whatever they are able to grow the site from there on, we share a certain percentage of the growth with the managers so that it keeps them motivated. And I also want them to be entrepreneurial, so they can see that their efforts are paying off, not just to Blackbook and to the investors, but to themselves as well, basically. So it's always good to share that. I believe there's enough to go around for everyone.
Yeah, sounds good. Yeah, and so to sum it up, what are your thoughts on Bitcoin right now?
I'd say buy while you can, and just hold tight. It's going to be a long ride. I actually just did a article yesterday on Medium. I'm going to send you a link to that. Just on what you asked, and hopefully, your readers can, your viewers, listeners can,
So you're holding a bunch of Bitcoin right now?
Yeah, I do. I used to do consulting back in 2017, 2018, like mining related consult. So I'm just holding all of that. Never spent that. I don't even know. I haven't even looked at my wallet in the last 2 or 3 years. Yeah, so I just let it sit. So I'm not buying actively, but yeah, whatever I have, I'm just letting it sit. I'm bullish in the long run. Yeah.
Good strategy. All right. Well, thank you, Mohit. Do you have any other things you wanted to mention or let our listeners know about what you are doing?
Yeah. So nothing as such, but yeah, if you just hit me up if you want to just talk about websites, geek out, talk valuations. I'm always up for that. Hit me up, blackbookinvestments.com, or my personal site, mohit.tater.com. Would love to chat. Always good connecting with like-minded people.
Okay, thank you, Mohit. Great to chat, and till next time.
Thanks, Michael. Likewise.
Bye.
Talk soon. Bye.
Domain Magnate is a leader in buying and selling online businesses with a proven track record of expertise gained from over 300 deals since 2004. To learn more about how we can help you acquire or exit a profitable online business today, head over to domainmagnate.com for more details.